Hello, welcome back to these videos at Apple Pie English School. Of course, this is Professor Kent coming at you again. Today, something about finance. I studied finance in college, as many of my students know that. I went 4 years for a master's degree, 4 years for a Bachelor of Science degree in finance and an MBA in finance. So today I'm going to teach you what the Rule of 72 is. So please stay tuned to find out what that is. But before I teach you, don't forget to give us a like below and comment and share these videos with other people to help their English out. So of course, usually every day we teach English. Today I'm teaching finance. So the Rule of 72, I use this probably from all the finance stuff I learned when I was in college. I used this rule the most. It's the most important, I think. I was moved when I love math. I've always loved math since I was very young, and I always liked tricks, how to do math quickly. And I was surprised I had never learned this in junior high school or elementary school. But finance people learn this in college. It's called the Rule of 72. So the Rule of 72 states that if you have an interest rate, you can know how many years it takes to pay off something. So if your house interest rate is, say, 6%, you have to pay annually on your house. So 6%, how long would it take to double? So if you're investing, I should say, like if you're investing in a savings account, loans count this way too, but you can know how long to pay off something. But if you're investing in a savings account and the bank says, okay, I'll give you 6% a year, how long will it take for that money to double? Well, 72, the rule of 72. 72 divided by 6, 12. So 12 years for it to double. So if you put in $10,000 in 12 years, you'll have $20,000. And then again, it'll double again. In 24 years, it'll be $10,000, $20,000, $40,000. So it'll keep doubling. So the rule of 72. If, for example, you want to know, for example, this pen cost me 100 yen, and the average inflation rate is 3%. So it's 72 divided by 3, 24. So in 24 years, this pen will not be 100 yen anymore, or $1. It'll be $2. And 24 years after that, it'll be $4. And 24 years after that, it'll be $8. So it'll keep doubling based on the interest rate. So you can tell interest rate or inflation, you can guess how long it'll take. So if you've paid off your whole house in cash, and so let's say your house is worth $100,000, and the average interest rate is 3%, then let's say 4%, so we'll have a different number. So the average interest rate is 4%. 72 divided by 4, we have what, 36, 18, right? So 18 times 4, 72, right? So in 18 years, your $100,000 house will be worth $200,000. 18 more years, it'll be worth $400,000. 18 more years, it'll be worth $800,000 if the interest rate stays the same. So it's quite easy. So if you want to see how long it will take you to pay off a car or a house, how much interest you can get on it, if the stock market's averages average year 10%, I think overall 12%. Since 1929, probably the average stock market is 12%, which means if you're lucky and you get in the average years, within 6 years your money will double. But of course, in the last couple of years, it's not like that. Some years are very, very bad, like negative 30% or 40%. But overall, if you stay in for the long term, if you stayed in the stock market now from 1930, for example, after the crash until now, what's that, 92 years? So with 12% average, if you get 12% average, every 6 years it'll double. So in 90 years, for example, you've doubled it 15 times. So you can see how much it's worth now. So you can take your number to the 15th power to find out how much, 15 doubling, not 15 power, to find out how much you've done it. So hopefully that helps you out. Again, Rule of 72. Please use in your everyday life. I use it all the time when even my wife asks me some questions, or my English school people ask me some questions, or business people ask me, well, how much do you think this will cost? How much will college cost for my kid in 4 years? Oh, that's easy to know, right? The interest rate now is 4%, 3%, for example. 24 years, it will grow to double. In 4 years from now, when your kid goes to American college, that's 1/6 extra than whatever it is now. So it's easy to know. Easy to calculate for the future. So I hope you learned some new information today. So don't forget to subscribe and watch some other videos here of our usually on Friday videos, where we teach different things. For example, this finance thing, Rule 72. Sometimes once a month or so, I teach you something about business. This is about business. And over here, some other popular videos on our channel. And until next time, have a good day, and see you tomorrow.